Hello everyone, welcome back to TechnoCharts YouTube channel. And in today's video, I'm going to analyze all the sectors with including Nifty and Bank Nifty. So the moving average that I have applied in the chart is the 30-week moving average, and below line is the relative strength line. So if you can see the chart of Bank Nifty will head to straight into downtrend if it breaks around 33,000 level. As you can see, the Bank Nifty is in stage 3 topping area and is in a completely sideways zone. If Bank Nifty breaks this area of around 33,000, then we may head into a downside. And the first target that I see in the chart is at around 30,000, and the next target could be around 26,000. So this is a very long term story as of now, and what I'm expecting is mostly sideways to bearish area, and the market currently looks sell on rise as of now. So if we look at the chart of Nifty, and then Nifty also has a similar structure to Bank Nifty. Now in this case, if we break the area of around 15,450 on closing area, already the Nifty is in downtrend, and we can see the structure like a triple top pattern where the first top was at around 1860, the second top was 1830, and the third top is at around 1790. Currently the structure is of lower high and lower lows, as the lower lows are also getting made, right? So if we make the chart like this, then we will see that the Bank Nifty, the Nifty is in a downward channel, right? So one can expect a small rise at around these levels only, as the Nifty looks oversold as of now. So any kind of rise would be a shorting opportunity. Personally, I will be looking to only short as of now. As you can see, the Nifty is in clear cut downtrend with lower high lower low structure. Now these are the important levels of Nifty and Bank Nifty. So if you look at the uh, chart, then we what I will suggest you is 16,000 is an important level on Nifty on the upper side, and lower side 15,500 is a level. So currently we are trading in between the levels, and one can play a sideways uh, like that. So one can sell options above this area and below this area, and can have a sideways view. We can have a swift rally above this area, and we can have a swift downside below this area in case of Nifty. So if you look at the indexes now, if you look at the metal index now, metal index has reversed drastically after giving a breakout in this area. Now metals are at support, and one can imagine and one can see that 5200 would act as a 52 to 5100 would act as a very important support for this. Now if you look at the weekly time frame, metals look really bad as of now, because of this severe reversal candle that is there in the chart. So currently if metal is in overall uptrend as of now, and there is not an issue if you are holding the stock, holding metal stocks or metal ETFs or whatever. Now only problem would arise if uh, CNX metals break around 5100 area or so, right? So this was metal. Now IT is in a clear cut downtrend, as I've mentioned in the previous video. So check out the I button right now. So I believe that IT is going to head towards around 24,000 levels or so, and where we can have a downside of up to 18 to 20% right now, even after the markets have fallen so much. So first level is at around 27,000, and the second level, the ultimate level where IT should bottom out, or where there could be a signs of reversal, will be 24,000. Now CNX financial service is also in a downtrend, as you can see, a similar structure like Bank Nifty. Now if you mark the levels of CNX finance, then we see that 1500 or so is an important support in this particular script. So this is the finance sector. Now Nifty 500 similar structure. Almost all the sectors are having a similar structure, where they are in a on the stage 3 breakdown area, or they have already entered into stage 4 downtrend. Now CNX energy is in a clear cut uptrend, and there is not an issue if you are holding CNX energy. Only thing is, this kind of reversal candle is a problematic scenario where this hampers the uptrend, right? So reversals are good, or the pullbacks to the moving average are good only if the candle size are small. For example, if you look at these candle size, these are small candles, and which are pulling back to the moving average. But this is a huge reversal candle that has happened. So currently if you look at the overall scenario, this looks weak. If we get a bounce or so, one can try to play the bounce in this scenario, as this is a retest of the previous breakout area also in the daily chart, right? So this is the daily chart, and you can see the energy had broken out of a VCP and then again is trying to retest that area. So there is but the retest has been a huge reversal. So I mean, I think so Nifty is going to Nifty energy is going to break down after this, right? The next sector is Nifty Mid Cap 100. Now Mid Cap 100 is at a very important support. I believe that we will be in a completely bad territory once we break this area. Personally, I feel that we are going to enter into some kind of bear territory and we are going to stay sideways. A structure like this is going to persist for a very long period of time. I say until next quarter or so. So but currently, I don't see any kind of good levels to accumulate, and I'm overall I am bearish on the markets right now. I would be looking to sell on rise rather than buy the dip. So I look for accumulation in scripts, then only I will be looking for buying the stocks. So thing that you have to remember before buying a stock or the using the stage analysis. Stage analysis works really well in bull markets or after the bear markets have finished, right? So this is one thing that you have to keep in mind, that do not miss the multi-bagger video to understand how to make money after the markets have come into a bear run or in a bull run, right? So the next stock, so the next index that we'll be analyzing is Nifty Auto. Now Nifty Auto is just in a sideways zone. Currently doesn't look any kind of there is no any kind of indication whether it is going to head up or going to head down. So I would say that this would be a area of sideways zone and there's no clear cut view. The next index is Nifty Infra on a stage 3 support. As of now, there's not an issue if you are holding this, but if the stocks start individual stocks starts to break down into stage 4, then that would be an issue. So do check out the stage analysis of your own video. And if you want to apart from this, if you are working professional and looking for consistent income, I have come up with a program of algo trading where I have come up with a program of algo trading where you can deploy your money in your own account and algos will take care of the trades. So for that, I have already made the video. Do check it out regarding the results and everything. The next sector is Nifty FMCG. Nifty FMCG is as of now the strong. I mean, looks good as it is on a support and is in a sideways zone. So I think so. One can have a what I can say is a okay, one can have a safe investment or this could be a safe area, but due to rising inflation, I mean the stocks have been beaten down. So I think so overall, looking at the inflation rate, looking at the US tech stocks, you looking at the US markets, looking at the bond yield and everything, overall the markets look personally too weak to me, and I wouldn't be interested to buy any kind of stocks until and unless they look like an accumulation and they are ready to break out, right? So breakouts are going to fail in this market, so do not try to anticipate new breakouts and do not try to chase them. Rather wait for pullbacks and try to trade with a low risk entry opportunity. So in case of pharma looks sideways to me and there's no clear cut trend. One can play the support area and resistance area, so you can buy on support and sell on resistance and play this kind of range trading, right? So small caps have clearly broken down into stage 4, like mid cap. Those who are still in a stage 3, small caps have clearly broken down. I see in the levels in small caps are around 7900 or so. So these are the first important level that you have to keep in mind before buying any kind of small cap stock. So small cap and micro cap are a strict avoid for me because they have entered into bad territory already. Now PSU Bank have broken down the important trend line support, and overall the banking stocks look weak as of now, as the PNB has reversed and most of the banking stocks have reversed. So and even with this, the SBI has given a stage 4 breakdown below 450 area or so. So I mean overall the PSU banking stocks are also looking weak to me. And the next is Nifty Realty has already entered into stage 4 downtrend. So let me clear it out. Now if you look at the chart, then already the support has been broken down, and now this was an important area of support. So as a stock, I mean the index has already broken down. Next area of support I would be looking at is at 360, and the next area is would be at around 295 rupees or 295. So these are the two levels that you have to keep in mind for Nifty Realty. So this was all about the sectoral analysis, with the analysis of Nifty and Bank Nifty. Overall, my view is that we are going to head into a sideways to bearish zone only, and I do not want to. I am not looking to buy any kind of dips, or I do not want to chase any kind of bounces that are going to come in this rally. So these are personally my views, and if you like the video, do share it with your friends, like and subscribe. Thank you.